Welcome back to another episode of Rich Dad Stockcast. I'm your host, Denney, and if you're here to sharpen your financial skills, you are in the right place. Now, today we'll be diving into a great topic, using real estate principles to cash in big on stocks. Now, as always, before we get started, don't forget to like, subscribe, and drop a comment below. Your feedback helps us to bring you more of the content that you want to hear. And for those looking to deepen their financial knowledge, make sure to visit stockcastbonus.com for access to free resources to help you along in your journey. And, joining us today is our resident expert, Andy Tanner. Andy, it's always a pleasure having you here.
Oh, Del, this episode might be one of my favorites. When you told me this is what you wanted to talk about today, I got lit up. This is so big in my mind. I don't know if it's going to be big to everybody else's mind, but in my mind, this is it's going to be good. I mean, this is a big one. So this will be
all
fun.
right. Well, let's get into it. So real estate and stock market investing, they seem like two different worlds, right? But
Kenny and Robert and Kim are going to kill me for saying this, but I don't see a big difference.
Well, yeah.
Oh my gosh. Can you believe that? I don't see a big difference.
All right. Well,
if Robert had a gun, he'd shoot me right now. But I don't see a big difference. I see a little difference, but not a big difference.
Okay. All right. So walk us through that. There's some core principles of real estate that match the stock market. Cash flow analysis, leverage, market timing, and all that stuff. How can the principles of real estate be applied to stock market investing?
I'll tell you. I think they're close enough. I think it's more financial education principles than it is real estate. I mean, does real estate or stock have a claim on serving people? That's the same dang thing, right?
Yeah.
The beautiful thing about Rich Dad Poor Dad that changed my life. I mean, I will be preaching Rich Dad Poor Dad, that book, till the day I die. That mission. No one can stop me from that mission, to elevate the financial well-being of humanity, that understanding of cash flow pattern. And when Robert first shows that, and he shows a little dot in that asset column in the book and an arrow going up into the income column, and people have that epiphany, I should buy stuff that goes in there that produces cash flow. Now you're thinking like a true investor, rather than a trader. And I would put it this way: what is the difference between a house flipper and a trader? You're buying low and selling high. To me, in the big picture, buying low and selling high, that's identical. I'm trying to buy something low and sell it high. I'm trying to buy something low and sell it high. I don't see a big difference in the mentality of the person. I'm trying to buy low and sell gold, buy low, sell high. So when you're a real estate guy, and I'm not a real estate guy, I own real estate. I just bought some more. Recently, within the last 2 months, I bought some more real estate. But I will tell you, the idea of buying low and selling high is not appealing to me in real estate. People do it. They flip houses. But what we really want is something called a distribution. And it starts with a D. Now think about this. I've got a distribution, and the way this works, maybe I ought to talk about this one. I put some money into what we call a syndication in Texas. This is identical to something Robert and Kim would do with like a Kenny McElroy. Is, someone has a big real estate project, maybe it's got 250 units or more, 500 units, whatever it is, 250, and you're going to partner and share. You hear that word? You're going to share in that ownership with a whole bunch of other guys. Okay, so each of you own a little piece of this project, a little share of it. Do you call them shareholders? No. You call them participants in the syndication? Hell, I don't know what you call them, but they are in a group, a mutual effort to own this. So you have this net operating income that comes in, and then you figure out and pay the debt after that. And you have this thing called profit. And the profit comes from serving people. You have housing. They're consumers of that time. They consume that time in that house. It's not their house, but the time is, and it's per month. It's a time issue, dollars per month. They're buying Like it's not dollars per apple, it's dollars per month. So you're selling time, and there's a profit there. And I'm going to show you what they do with that profit. Listen to this. They distribute it. They make what's called a distributions. In COVID, when that hit, I had some syndications, and every single one of them, every single one of them stopped distributing the cash. They said, we can't make distributions. We can't have all you sitting around the table that share in this. We're all sitting around the table share. I can't distribute the profits because there are none, because there's no rent being paid, because we're in a pandemic, right? That's called a distribution, okay? Now, let's say someone wants to produce energy. So instead of offering housing, they're just offering a different service. That's it. Or maybe it's cell phones. Instead of offering housing, I'm going to offer you communication each month, time on my network each month. And each month you can get on my Verizon network, and there you go. So we're all mutually sharing in this. Now, in this case, they do call them shareholders, but it's the same dang thing. We're just sharing in this effort to produce value for people in some way. And at the end, we have this thing called profit, right? And there's profits. And we're going to take a portion of those profits, okay? It's called a ratio, right? A payout ratio. And we're going to divide. It's the same. I mean, if you turned off the sound, it'd be the same thing. Starts with a D, divvy up, divide, distribute, dole out, whatever you want, whatever D word you want to use. We're gonna divvy out, and we call that a dividend. So to me, this is so the same, right? To me, why would you limit yourself? Like, housing's awesome. I can't bash real estate. It's incredible. You're providing a basic need. Now, you're probably not going to blow it up like you would with AI. Like if you had an AI company, or like Apple's coming out in their eye in their new phone, or if you want to serve people in other ways, that's what ownership of a company does. Now, I'll tell you what the difference is. Let's say I get a single family home, and I'm starting out new, and maybe I'm only cash flowing $300 a month. And so you have some money in that house, $300 a month you're getting. All right, let's say I have some shares of ExxonMobil, and it divides things out to average around $300 each month, or maybe it's $1,200 per quarter, whatever. To me, that's fungible. To me, whether I'm serving people with housing or whether I'm serving people with the oil, I'm getting a passive income come in. Leverage. That is a big difference. That's one of the places where it's different. I think real estate's a fantastic place, because if a guy has nothing, he can borrow, right? If a guy has nothing, he can borrow. And that's where you start approaching infinite return. If you're Kim, I guarantee you Kim has done this. It's probably a 5-year deal. You put money in a syndication of some kind. 5 years later, they refinance it, and they give you all the money back out of the refinance, and it's tax-free. It's debt, not tax-free, but you've got all your money back. Now everything is infinite from there on, because you've got all your money back, right? Okay, you can't do that with stocks with borrowing, but you can do it with options. Is I can buy, Kraft Heinz, Dow Chemical, Prudential, any of these I bought, and I can take like a Dow Chemical, and I can write options as leverage to increase that income to where it pays for itself in a very short amount of time, 4, 5, 6 years if you're good at it. Now all my original cash is back in my pocket. Same way a refi would work with leverage. Well, I can get it back by option premium. I can accelerate that return of cash. Now it's paid for free and clear. So to me, it becomes very identical. You have this real estate project that you've got all your money back out of, and it's still in your cash flow. So if you were blind to which asset it was, and you just got, someone, person A went and got the cash and dumped it on your table, and person B went and got the cash and dumped it on your table, you'd say, okay, well, which one did it come from? You'd have to guess. Did this $300 come from my real estate investment, or did this $300 come from my stock investment? Could you tell if you did? It's just $300, right? And what it really comes down to is what you prefer. You don't want to be dogmatic about it. I never bash an asset class, because I love the cash flow that comes. I wish I had more real estate. I wish I had more stocks. I wish I had more business. I wish I had more of all of those things, because they're all a good thing. And I think the thing that gets me passionate about this discussion is people are like, it's almost like they think it's a football team. Well, the Bears are better than the Lions, or the Bulls are better than the Lakers, and it's basketball. It's a game. It's serving people. Look, it's a generalized principle. The more people that I serve, the more effective I become. What form that service takes is granular to me. The big picture is, how do I serve more people? Well, I could not go into my garage and build an iPhone. I don't have what it takes mentally. I don't know how to serve millions of people all around the world to helping them communicate better in this thing they have in their pocket that is magic. To me, being a part of that and having an Apple and being a shareholder of that, and a guy like Steve Jobs says, look, I'll share my brain with you. I'll share this with you. I'll share this goodness with you. I'll let you be a partner with me, and together we'll change the world by giving people communication and devices that are just phenomenal and informative. To me, it's really exciting. So the idea of leverage is a real estate idea in terms of debt. The idea of leverage is a stock idea in terms of options. The idea of a distribution is a cash flow idea from real estate. The idea of a dividend is a cash flow idea from stocks. And learning those things and not being a flipper. If I understand real estate, I'm either going to flip or I'm going to have tenants with cash flow. I choose the latter. If I'm going to be a stock guy, either buy low, sell high, and be a trader, I become an investor, and I look long-term to own a business for cash flow. I know I'm really going because I get excited and passionate about the topic, right? Where people make the mistake is they say, well, oil is a bad idea because it's too risky. Well, T. Boone Pickens did fine with natural gas and oil. His family's just fine. I mean, it seemed like he worked out okay. Kenny McElroy's done great in real estate, right? Warren Buffett, I think he's the best investor in the world. He's done well in stocks. So these principles, these generalized principles, I think are bigger than anything else. And I'm so grateful, like for Kenny McElroy in my life, so grateful. Without guys like him and Mike Maloney teaching me about currency, and Robert and Kim, this whole journey I've been on over the last 20 years, it helps me see currency, assets, debt, infinite return, depreciation. I see it all differently than I ever would have without a financial education. So those lessons from Kenny, real estate wise, are huge, because as I'd watch what he would do and the way his mind would work, and I'm not saying I understand it well, I'm saying I'm still learning, but as I watch the way he thinks, I'm thought, now when I see a stock investment and opportunity here, I'm like, I see these parallels of how he would think, and risk management and control and risk. And I think to myself, this is a similar principle here with options that it would be. And by the way, you have a margin account too, which is debt. So there's all kinds of parallels. And if you learn real estate really, really well, you'll be a better stock investor. If you learn stocks really, really well, you'll be I'll give you another example, Del. Well, maybe we ought to take a break. When we come back, I'll share with you probably it's a top 10 nominee for things I've taught my kids that I've learned from the Rich Dad family. And when we come back, I'll share that with you if we have time.
Well, let's do that. I feel the passion, but let's take a quick break. But don't go anywhere. We've covered the basics of how real estate principles can apply to stock market investing. And when we get back, we'll dive deeper into how to adapt these strategies into the stock market. And what is Andy teaching his kids, right? Stick around.
So far, it's been great. I needed a source where I could really enrich my education through stocks. I didn't really have an avenue for it, and it's helped me a lot. The simplicity has really gotten me on the track to where I enjoy the learning, as well as it's really solidifying in my mind. And like, they're not just trying to sell you something, they really care about the people that are in the course, and they really do care about you and your personal goals, and what you want to do is to help you and your family and whatever your goals are in life through that. So it's really been great.
Welcome back to Rich Dad Stockcast. I'm Denney, here with our expert Andy Tanner, and we're talking about how you can use real estate principles to make big gains in the stock market. Now, Before we jump back in, don't forget to check out stockcastbonus.com for some free resources that can give you the edge in your investing journey. Now, Andy, let's dive back into the practical side of things. Now, before we took the break, you talked about, you teased us a little bit with what you taught your kids. Can you expound a little bit more on that?
Yeah. So Robert and Kim, I'm going to share this story, and I think I've got it right because I've heard Robert and Kim share it many times. So when they became financially free, it wasn't like they had $100 million when they started out. They simply got out of the rat race. And people would ask them, why don't you have a job? They say, well, we have some real estate and we have sufficient rental properties that we now receive enough passive income that it's larger than our expenses. We don't need jobs anymore. So they weren't like, driving Ferraris back then. They weren't driving Lamborghinis right back then, but they had something more valuable than a Lamborghini. They had something more valuable than a Ferrari back then. They had something so much more valuable than any material object a person could ever have. They had freedom. They didn't have hundreds of millions. They didn't have, a huge home they've got homes all over the world now. They've got them in Hawaii and Phoenix and different places that we won't disclose. But they didn't have all this stuff. They just had freedom. And that's what this is about. You can elevate a person's well-being faster through freedom than you can through things. And that's all I want in my life is more and more and more freedom. I'm just not a person that really gives a care about things very much. I care about people and freedom. And if you want to have a lot of happiness in your life, look at the amount of freedom you have and look at the amount of people that are around you that love you and care for you, and you'll have a rich life. Freedom and beautiful people, companionship, love, a life of love and freedom. Are you kidding me? And so that's what they had. That's what they had. They had love and they had freedom, and that was it. That's what they have. And so people would come and say, you guys look like you're doing okay. What do we do? And he built this thing called the cash flow game. And it was incredible. I remember they had an event on like celebrating the cash flow game, and they showed a picture of them drawing the thing out on their kitchen table or wherever it was. And we saw the first sketches of the cash. It was for me, it was a visceral experience because my family has played that cash flow game all the way through growing up. When my kids couldn't even do freaking math and all they understood was arrows, we taught them how cash flow worked through arrows without even numbers. And I would take Zach and Marcy would take David, and we'd team up when we play that cash flow game. And it taught us about how real estate worked, taught us real estate principles. It's a real estate-based game. Now, the stocks, it's got capital gains in stocks. It doesn't do stocks in that game like real estate does. If it did, you could build a game where it just flipped. You could do it. So, you get a card where you flip the house and a card where you got the dividend of the stock. It'd be the same thing. You could flip it. But they had real estate. So when we played that game, my kids learned about the difference between a capital gain and the difference between cash flow investing. They learned those principles to where they could apply them to any asset class, including oil, right? Any asset class, including business. And they learned the big top 10 thing, and this is really important, fundamentals. Where real estate and where stocks and where business and where all the asset classes come and have things in common is if you understand the fundamentals. This is called Cash Flow 101. It's a game you play. And so once you get that foundation of fundamental analysis, which is a fancy way of saying look closely and analyze, right? That's what analysis means. Look closely at certain numbers, right? Learn to look closely at certain numbers. And these are fundamental. In the same way a doctor would take numbers of cholesterol and A1C and BMI and heart rate and blood pressure and hit your knee with the hammer and have you kick. The same way, those are fundamental things that make a person well, a business, a real estate, a stock investment, in any type of asset. If you can read a financial statement and do what's called a fundamental analysis. What are the fundamental things that are the same across asset classes. What is not what is different? Damn, man, what is the same? It is the same. If you play the cash flow game and you understand that, now when I look at a cap rate and I say, what is a cap rate? Well, how much income's coming in? Basically, it's called net operating income. And how much did it cost me? And that tells me how fast I'm making money. Like, I put this money in, that's price, right? The value of the property, I put it in. Here's the money I'm putting in. How much net operating income am I getting off of that? Okay, great. A stock, enterprise value, EV over EBITDA, it's just flipped upside down, or PE ratio, right? E is earnings, money coming in, same as NOI. Price, oh, PE, price on the top, earnings on the bottom. Oh, over here, cap rate, earnings on the top, or earnings on the, it's just flipped, right? But it's the same damn thing. PE and cap rate, I see those things as being very similar in the big picture. What am I paying and how much is it earning? What am I paying and how much is it earning? It's a rate of how much cash flow comes or earnings come by what you pay. So when you learn basic financial education, that's why we have stockcastbonus.com, because my kids learned fundamental analysis. It's the first pillar it's the first pillar of investing. And when you learn that, you can start to make better decisions about, okay, what does a healthy person look like? And what does Andy look like in terms of BMI, right? In terms of BMI. Okay, what does a healthy real estate investment look like? And what does an unhealthy one look like? What does a healthy stock look like? And an unhealthy stock look like? And so that's just it. Zillow doesn't mean jack. Because you don't know what it's worth until you sell it. A stock price doesn't mean jack. It's all phantom stuff. You don't know what it's worth until someone buys it from you. So these parallels are the same. And when a person learns these generalized principles, they're the same. So I know I got passionate on this podcast, but I love financial education. I love sharing it with people because I know that it changes people's lives. And whatever happens and whatever happens politically and whatever happens in all the milieu of your life, education is empowering. And education has the ability to make you a better citizen, a better voter, a better investor, a better person. It will find your weaknesses and turn them into strengths little by little. That's what it's about, is elevating your well-being by getting excited and getting motivated about saying, I'm going to be smart when it comes to fundamentals. I'm going to learn how to take real estate principles and apply them to whatever I'm passionate about, whether it be business, stocks, commodities, oil, whatever it is. Play the cash flow game. Play it, buy it, play it. It's awesome.
And play it with your family. That's the key right there. What a great,
absolutely true.
Such a great family time to do that. Bringing up a word that you used earlier, and it was the word dogma, right?
Yeah.
It's easy to see, and dogma really is like, this is the only way, right? To kind of define the word, right? This is the only way to do it. It's the only way. It's the right way. It's the truth, whatever it might be, right? We get stuck in this bucket and it's hard to get out.
Yeah.
We might be in the dogma, I'm only a real estate investor, or I'm only a stock investor,
or I'm only an employee.
Or I'm only an employee, right? What would you say to someone like that needs to break that dogma?
Well, it's interesting you bring that up. Is I'm watching Steve Jobs, who's smarter than me, and he's probably smart. He's probably one of the most influential people on the planet that ever lived. I mean, he really was. He's a Thomas Edison level guy in my view. I think he really was. There's just certain people that are titans in business that, he's got $1 trillion, multi-trillion dollars of whatever it is. And I'm watching him in the irony of giving the commencement speech at Stanford, a school that he dropped out of. And I'm just amazed that the dropout is addressing the graduates as the most successful person ever to come out of that school, probably. So you got the best guy that ever went to Stanford left, and he's given counsel to those that stayed. And he's got cancer and he's dying. And so he's searching for words of wisdom he can leave. And I'm watching this with the irony was so thick. And he said this, and it hit me like one of those moments where, God, it was just visceral. It was just, no passage has ever come into a heart of man like this one came to mind, I think. And he said, don't be trapped by dogma, which is really living with the results of other people's thinking, right? He says, don't be trapped by dogma. He said, find the courage to listen to your own inner voice, right? And once you find that inner voice, have the courage to do what it tells you to do, because somehow it knows exactly who you want to be. And I wrote that quote down, I just paraphrased it there, but that idea of not being trapped by, some dude says something and so therefore it is, and not questioning that. Don't be trapped by the dogma of college that says you have to be, a job guy. Don't be trapped by that dogma. And furthermore, don't be trapped by the dogma that says, oh, stocks are the best way to go, or real estate's the best way. You find your own inner voice and find the spirit that's inside of you of how you want to serve other people. And the more people you serve, the more effective you become. And if that's through being a real estate investor and providing housing in a place, I mean, think of that, how spiritual that is. I'm going to give people a roof over their head. That's what I'm going to do with my life. I'm going to make sure that people have fair, affordable. I'm not going to be a village raper. I'm going to make sure I have a roof over their head. There's people, without getting too emotional about it, there's people that have a roof over their head because there's compassionate capitalism, where when you have a choice to raise rent, you don't really have to if you're in a good cash flow position, right? If you've done it right. If you've done it right, you can provide people with a huge blessing, because you can beat your competitors. And as they look around at what other people are paying, and they're playing less with you, and you're blessing a life at that way. And the person becomes more important than the money, and there's enough for everybody if we do it right, right? I look at all the ways you can serve people. I'm so proud of being a stockholder in so many of these companies and being an owner, because I never could have done it by myself. So that's kind of I don't know if that's a rant or if it's too visceral to share, but learning to serve other people with these principles, whether it's in stock or whether it's investing, I think it elevates people's well-being. And I think we serve more people in either asset class. I think it can be done. If you took away all the stocks I own and you removed them from people's lives, you remove those services from people's lives, their well-being would be gone, down, including their financial well-being. The things that I offer via a shareholder, those companies make the world a better place by and large. They're not perfect, but participate, get going, provide things for people, learn the principles, whether it's real estate or whether it's stocks. And then, I'll plug it. If you haven't been to stockcastbonus.com, the life change, the change of life is there for you. We got 3 million people. Don't know how many have come, but you go to stockcastbonus.com. For many people, that is the first step to a total life change, because these principles are laid out so simply and beautifully by my team. It's pretty awesome. It's a great way to live.
Andy, that is a lot to unravel there. And
I was kind of like church. I don't know. Dogma.
Well,
get rid of that dogma.
I love that quote. That's one of my favorite quotes. And I made some really big life-changing decisions after I read that quote. And I think it's good to challenge your own dogma. Sometimes we can be trapped by dogma and we don't even know it. You know, there's, I heard it kind of a funny saying is that, just because our nose is above our mouth, we still need someone else to tell us we've got bad breath. So I think that's where it's good to have a coach, where it's good to have a mentor. Yeah. It's good to put yourself in circles where they can educate you and bring you up and lift you up and say, hey, this is the great thing about real estate. This is the great thing about the stock market. There's so many great things. And so, Andy, I got to say, I'm appreciative to you because I've learned so much from you about investing and about life. And I know I'm better because of listening to you. So I appreciate you.
Well, I just close by saying be open, and you have the choice to be open to new learning. As soon as we become dogmatized, it closes our mind because we figure we know what's right. And then there's opportunities that are missed because we misjudge them, right? We want to knock on someone's door. We want to say, oh, real estate, all you're going to do is cleaning toilets and all. It's debt and it's too risky. And well, then you got to knock on Kenny's door and tell him he's off base, and he's not. Open your mind to the possibilities that good things can be there. If you're open, not closed, you'll be better off. That's just my opinion. I'm not an expert. I'm just a student like everybody else. I'm just getting up in the morning and throwing my punches and raising my family, just like you watching. We're in it together. So let's get smarter together and take your real estate principles and real estate knowledge and techniques and just apply them in business or stock or oil or anyway. You'll find that if you're doing real estate right, you probably would do stocks right. And you'll find if you're doing stocks right, you probably do real estate right. We got to do a podcast on shorting the dollar. Let's write that down. And we got to do a podcast on shorting the dollar. Fundamental analysis is a top 10 nominee. Shorting the dollar is also a top 10 nominee because all real estate is shorting the dollar. And you short a stock, you short the dollar, exactly the same. Real estate investors, it's not about real estate. It's about the dollar. Stock, it's not about stock. It's about the dollar. It's about short positions on the dollar. It's about inflation. It's about the grunch. It's about the universal cash heist. It's about the Fed printing money. It's about reducing the value of a dollar. And whether you want to capitalize on the reduction of that value via real estate, you want to capitalize on the reduction of that value via stocks or via business or via oil, doesn't matter. Get your cash out of your pocket and get an asset, because the cash in your pocket's going to die. And whether you put, wherever you put that, it's better than being in your pocket, because you got to learn to short the dollar. We should do a podcast on that. That's another real estate principle that applies to what I do every single day.
I think we might just have to do that. I think we will see that here coming up in the near future. So
let's do that. Let's write that down and put it on the schedule.
All right, beautiful stuff. Well, that's a wrap for today's episode of Rich Dad Stockcast. I hope you've enjoyed our conversation on using real estate principles to cash in big on stocks. And a big thank you to Andy Tanner for his insights and expertise. Now, remember, staying informed and educated is the key to success. So whether you're just starting out or you're a seasoned investor, don't forget to visit stockcastbonus.com for free resources that can help you grow your financial knowledge. And if you found this episode helpful, make sure that you subscribe, you leave us a comment below. Your feedback always helps us to continue to bring you more of the content that you want to hear. And make sure you share it with your friends and family so they can make better financial decisions too. So thanks again for tuning into Rich Dad Stockcast. Until next time, stay smart, stay invested, and take control of your financial future. I'm Denney, and we'll see you on the next episode.
This podcast is a presentation of Rich Dad Media Network.